The 2024 Berkshire Hathaway Annual Meeting did not disappoint many shareholders who visited Omaha, Nebraska for the annual meeting where they get to see Warren Buffett, as well as the folks watching online like I did. And you're listening to the Investing Mastermind Podcast. I'm Michelle Markey.
And I'm Signe Lundholt.
So, unlike me, Sina actually attended the meeting in Omaha this year. So, Sina, why don't you tell us what it was like to go this year?
It was an amazing meeting as every time, it's my third year. And I think this time I'm starting to know people, and have met people for a couple of consecutive years. So I'm more comfortable. I know the ins and outs of where to be, when, and things like that. So everything was very smooth this year and I really enjoyed it. It's probably been my best meeting so far. But again, because I'm a little bit shy to begin with and need to just, get an overview of everything. So this year I feel I could be more like myself, really. So yeah, it was great.
What do you think about how we no longer have the incredible investor Charlie Munger, who sadly passed away last November? What was it like attending the Berkshire meeting without him?
Everything was really about Charlie. A lot of people, of course, were talking about him. The video was also a tribute. Before the meeting, there's a video, and that video was a tribute to Charlie Munger. And Warren Buffett talked a lot about him. Even something very cute happened during the meeting where Buffett was Charlie, and then, it was Greg that was sitting next. But it was so cute that
Mhm.
I don't know if that's the right word to use, but I really felt very emotional when he did that. It was so sweet when he said, just out of pure, this is usually how we do it, Charlie, when it was time for Charlie to speak, and then there was no Charlie, but it was so sweet when he did that.
Yeah, I remember that, and I think Greg reacted saying, "Oh, it's a great honor to be called Charlie." And yeah, what was the video like? Because for those of us who may have only watched the live stream, we didn't get to see that special Berkshire only video that gets displayed to shareholders who are in the arena at that moment. So, do you
I
mind
actually
telling us a
thought
little
that
bit
they were
about?
streaming it this year. They talked about they were going to stream it, so maybe they've, you can find it somewhere out there
Oh,
online.
maybe I don't know if I maybe I missed it.
Yeah, because they did talk about that this year they would stream it, but usually they don't because of the rights, and they actually had to get the rights from, Buffett was joking about how there's like this part where the Desperate Housewives, that TV show is one of the Desperate Housewives is she's introducing Charlie to the other Desperate Housewives, and Warren Buffett was joking about how difficult it is to get the permission from 5 different Desperate Housewives to actually be allowed to show that and stream that video. So I do think it's probably available out there. It was a very, very nice video with, of course, Jamie Lee Curtis was there. As we saw last year, that footage, Michelle, where Jamie is very interested in Charlie Munger and flirting with him, which wasn't streamed last year, but I actually think, part of that scene is available online, which is very, very sweet also and fun. There was a lot of fun things. And in that, they also showed all kind of pairs throughout the time. Like, for example, Beavis and Butthead, Laurel
Mhm.
and Hardy, all kinds of, Simon and Garfunkel, fun partners as well as more serious partners, but partners in general. And then they flipped to showing Warren Buffett and Charlie Munger. And just like in the annual letter, Warren Buffett mentioned that Charlie was the architect behind Berkshire Hathaway, and he kind of reiterated that after the movie. So it was very, I was like, I'm definitely gonna cry during this movie, but I did not. So I'm very proud of myself. I did get, of course, emotional, but I kept the tears in because, yeah, there's like 40,000 people there in that room. So yeah.
Wow. So, do you think it was like as many people came as the previous years?
Yeah, I think so. A lot of people that I talked to, there's a line before the meeting as well as at some of the parties after the meeting or events after the meeting. Actually, a lot of people that was there for the first time mentioned that they wanted to be there because of Munger had passed away and they really wanted to experience the meeting. And I guess it was, while we still have Warren, that's not what they said, but it kind of became even more clear to them that they really needed to go this year. So I feel that there was as many people as usual attending the meeting. Like when you look around the whole arena, it was full.
Mhm. That's great. Well, that's great that even though it was, uh, a bit of a change and a transition, and we were so used to seeing Charlie Munger there, and I felt like his force was felt even though he wasn't physically there, but it's kind of funny that the meeting happened on May 4th because you could
Yeah,
definitely feel, "May the
good
force be
one.
with you" from Charlie, so it definitely was, it seems like.
Yeah, that's a good one. That is a good one, Michelle. Yeah, and I do feel that he was there in spirit, and so much in the meeting was about Charlie. There was at the Bookworm, which is a bookstore, and they usually have a stand. But this year and usually they would sell like maybe 30 different books that was recommended by Warren Buffett. But this year they only sold Poor Charlie's Almanac, which is, this kind of thick book with Charlie quotes and some speeches he's done and some thoughts he's been publishing over the years. And that was the only thing. I did not buy it. I think there was 2,500 copies and they did sell out
Mhm.
because I already have one, but this was like the fourth edition or something like
Yeah,
that.
and it was abbreviated.
Yeah.
Yeah, I actually saw that book before at this New York City pop-up where it was featured there, but I was like, "Oh, I have the blue one, the bigger one with more pictures, like, I don't need another one." So, it's good for people who wanted to get, like, an edition of the Poor Charlie's Almanac, and maybe it's easier to read, like, some people might find it's a little bit easier to get through without all the pictures or something, but, whatever people prefer. Like, I'm just glad I got that more original copy in a prior meeting.
Yeah, exactly. And I have that one too, the blue one, and I'm
Mhm,
very happy about that one. It works for me, and that's also why I wasn't going to get the new one, even though, you get all, oh, it's a special edition and there's only a few thousand copies. And I was like, oh, maybe I should get one, but I I didn't get one. I bought most of what I wanted to buy at the meeting. Like last year, they had these little teddy bears that's called Squishmallows that also sold out, and afterwards on eBay they were super expensive. I think we talked about it last year. So I asked my kids, are you sure you want some of these teddy bears again? And like, yeah, yeah, yeah. They love
mhm.
their Buffett and Munger teddy bears from last year. So I did line up and I didn't get the ones I wanted because they sold out right as I was in line and I was very close, but didn't make it in time.
Aw.
But I did get the smaller ones, which are very, very cute. And yeah, so happy I got them and my kids were super happy as well. So
Well, that's good. Yeah, I mean, that's really surprising to me how much, like, it's a bit of an arbitrage opportunity for the people who might get the Squishmallows in the meeting, and then they sell them on eBay. I didn't imagine so many people would covet those things so much.
yeah, I've been working for a toy manufacturer and I know what it's like with those limited editions, how crazy people get and, buy extras in order to actually sell them on eBay. So, but our Squishmallows are being used every single day. My kids sleep with them, and so they are, I'm getting my money's worth from
That's
those
great.
Squishmallows. Yeah.
Yeah, they're not just sitting in a closet. Like, I think I might actually own a Squishmallow myself of like a Baby Yoda, like when it first came out. And it was like the last one in Costco I bought. And I was like, wow, this $20 Squishmallow thing just makes me feel happy to hug it. Like, I was just so happy to have it at that time. Like, I don't normally buy frivolous things, like something that is just a pure toy. And that moment, I let myself spend that $20 and I didn't regret it. I was happy to like use it. I featured in some of my YouTube videos at the time back in 2020 of this like Baby Yoda Squishmallow. So yeah, I mean it is a surprisingly kind of like comforting thing to have.
100% agree. There's something about that quality. It's firm, but still very squishy. So I love those too. I have
Yeah.
to admit
It's
it. So
I guess that's why
mm,
they're selling them.
yeah, yeah, exactly.
Yep. That's funny. Well, I know we got into a little bit of the Squishmallows, but
Yeah,
what
sorry about
else
that.
happened, Sina, during the Berkshire meeting? Whether, I mean, do you want to talk about some of the things that were actually discussed at the meeting itself, or should we talk about like what other events you attended? Which would you rather talk about?
We just talked about a big topic, which was Charlie, and another big topic that was discussed at the Berkshire event was Apple.
Mm-hmm.
So Berkshire sold a small portion of their Apple shares, and that was really talk of town. There was a lot of questions about that at the meeting. I also think that Warren Buffett actually did a good job for once in talking a little bit about what was happening. Usually he doesn't necessarily talk a whole lot about why he buys things or sells things, but he was actually very open about that. So that was, something that people talked a lot about, and the motivations for selling, etc., that we can dive into. And I also know, Michelle, that, you had some thoughts around that.
Yeah, so when I learned that Buffett said they sold about 13% of their Apple stake, the first thing that came to mind was if that had anything to do with offsetting the losses they experienced when Buffett bought and sold Paramount. And then I realized Paramount is a really small stake. They only invested about $1 billion, whereas I estimate that Berkshire should have gotten at least $22 billion of profits out of Apple. So I'm wondering, just give or take, I could be wrong, but I there's sometimes people get capital gains on something because they want to offset capital losses on something else, and then the taxes kind of cancel out. So that's what I thought he was maybe suggesting with some of the tax thing. But then subsequently, I learned that maybe it could be due to another tax reason, which an article online suggested that the tax reason could have been because if the tax rates for corporations might go up in the future, they wanted to maybe take some gains off the table now and add to their cash pile and pay the taxes at whatever current rate in case the tax rate goes up in the future. So there could be a few reasons that I heard or that I'm guessing could have been part of the reasons. Like, I know Buffett said he was happy to pay taxes and whatever, but why sell Apple at all? Like, I think if you're going to say Apple is one of the best equity holdings you have. Like it's as good, if not better than Coca-Cola and Amex, but then why not sell some of Amex or Coke shares? Why sell the crown jewel, Apple, if that's your best and will continue to be your best holding? So that was something I didn't really understand is why reduce that stake when it's so meaningful? Could Berkshire think that it was a little bit overvalued and want to get some more cash in case there's a bigger buying opportunity in the future? Because I felt like that was in direct contrast to a few days before Apple had announced a $110 billion stock buyback. So why is Apple buying back shares when Berkshire is selling it? Does Berkshire think Apple's overvalued, and in which case that would make Tim Cook look bad for buying back shares at too high of a price? So it's sort of an ironic kind of thing going on there of like who is right, who is more correct about the stock. So yeah, what did you think, Sina?
Well, that's, some of the same speculation that actually went on at the meeting itself. Some people even said, that they had actually, agreed on, okay, so you sell and you buy, so that it was actually in sync what happened there. So, some of the speculation I heard was the tax reason that you just gave. Another reason was that Apple was, the valuation was high, so he wanted to sell because he thought it was overpriced. The stock was overpriced. So he sold at a time where he believed that the stock was overpriced. Then a third reason I heard is because he's expecting turmoil in the stock markets, which would be very odd if that's why he sold.
Yeah, like the whole cash pile being at $189 billion now, and Buffett was saying that it could go to $200 billion. So could Buffett actually prefer having more cash over having more Apple? So yeah, I just want to add that if that was part of your point.
Yeah, there was, some people that actually mentioned that in the future he foresee that the stock market would crash, and that's why he needed cash. Another thing I also heard was that he was talking about the S&P 500. So there was a question at some point, and he was talking about the S&P 500, but he was being really unclear, and it was obvious that he really did not want to answer that question. So some people also speculated maybe he is actually interested in buying one of those Magnificent Seven, and that's why he need cash. So we don't know if it would be, would he buy into Microsoft now that Bill Gates has kind of stepped away a little bit from Microsoft? Is it Amazon that he's interested in? Like, the way Amazon has been set up is for, again, long-term growth. So it's been set up with a mindset of long-term developing the company for a long-term succession of the company. So a whole lot of speculation if Warren Buffett wanted to buy into one of the Magnificent Seven in the S&P 500.
Interesting. Like the part about Amazon would make sense because I think Berkshire already has $1 billion in Amazon. So if they wanted to increase their Amazon stake someday, perhaps that would be something they'd look to do, or I don't know, maybe even Google. Who knows if they like that as a potential play. And the other part about when you said speculation is Buffett is getting ready for maybe a stock market crash. I seem to sense that from his annual letter this year that he was warning about sort of the 2008 like situation. And I think he was trying to justify to himself and other people, we are justified in holding, like by the end of this quarter, $200 billion of cash. I think that there's a very particular reason that Berkshire is preferring to load up more on cash, and they have a lot of that cash in treasury bonds rather than at keeping it in a stock like Apple. So I feel like that's very strange that he thinks it was okay to sell some Apple. I felt like that was a little bit uncharacteristic. And he was trying to tell the shareholders like, "Oh, we don't mind paying taxes, and I don't think the audience will mind that we took some Apple off the table." But that's a little bit weird because in his, I think around 2020 annual letter, he said it was a bit of a mistake to even sell a tiny bit of Apple. Like he's like, "Oh, I don't know why we sold Apple." Like it's like he regretted it in the past selling a little bit, and now he sold a lot more of it. Like he didn't just sell like 1%. He sold like 13% of his Apple stake, which that's a big decision. So I feel like that's sort of a foreboding signal, like as if everything is not okay in the stock market world, and for whatever reason they're trying to have a bigger cash hoard for now than to keep it in Apple, which isn't that like it's just against everything we've kind of learned from
Yep.
Berkshire and Buffett.
So some of the discussion that's been going on around that is that, Buffett also did regret not selling Coke at a certain point in time where Coke was also trading at a very high valuation. And he's mentioned that over the years. And I also think what's interesting is that he mentioned Coke this year in the annual letter. So, there might be something around that. So there was a lot of chatter around, okay, was it the same scenario as with Coke back in the, 90s, where there was a point he should have potentially sold Coke, where he didn't.
But yet he likes to say like, we should hold on to stocks forever. So why is he not holding on to Apple forever if it's such a great company?
Yeah, and that's actually also, he did talk a little bit about that Apple, well, he didn't say it specifically, but somebody asked about his selling strategy, which he did not talk about because I was listening and sitting there like ready with my notes. But he did talk about, he always know whenever he enter a company if it's one of those positions that he's going to keep forever or if he's going to exit that position over time. It did sound like Apple was one of those positions that he was going to keep forever, actually. And that's what I heard, and maybe I'm incorrect. And if you listeners disagree with that, you're welcome to write us about it. But that was kind of my takeaway from when he talked about his selling strategy, that he mentioned Apple in that regard, that's as a company that he would keep.
Yeah. Well, and I'm sure they are keeping it, like, but why take any off the table? I get like Okay, sure, like you might have regretted not selling Coke, but I mean, I guess it doesn't have to be all or nothing. It just seemed so surprising that you would even sell any of it. Like if it's truly the best aside from maybe Berkshire Hathaway stock, like it's not as if we see him, let's say it was $20 billion. It's not like you see him plonking that into Berkshire stock of like, oh, I think it's a better bet to invest that 20 billion into Berkshire. They're just adding it to the cash pile. So who knows like what they're really buying, but it seems to me that they probably are getting ready for another financial crisis. I don't know when that will be. Obviously, none of us can predict the future, but it just feels like they would rather have a lot of dry powder ready to buy a bunch of companies in the future, which may or may not be Buffett making those decisions. So perhaps it will be Greg Abel, the CEO successor in the future, who might make those investment decisions. So maybe they think they're going to need all that cash for that time in the future, whenever that might be, to buy a lot of wonderful companies on sale.
And that's actually a great transition, Michelle, because one thing that was really great to hear this year was how Buffett 100% showed trust towards Greg. What Buffett says is that, or said at the meeting, was that Greg was the successor. And one of the questions was who's going to make decisions about what stocks are going to be bought and sold and companies that's going to be bought and sold, investment decisions. And Buffett was super clear that is the CEO. So, of course, like just like him today, he really sees that Greg is his successor, and Ted and Todd, who are also making big decisions when it comes to investing, would play the same role as they do today. So, Greg would simply step up and being kind of the same, figure as Buffett is today. I just thought that that was great. Adam Mead, who is, following Warren Buffett very closely, he's got newsletters. We interviewed him for the show. You've interviewed him multiple times, Michelle. And Adam Mead said that, he felt that it was really like a will almost that Warren Buffett gave throughout this meeting, that this is my will, so that the board knows exactly what Warren Buffett expects and what he wants of Berkshire. So I thought that was an interesting input from Adam Mead as well.
That's an awesome insight. And it makes sense, like to say it more publicly and reiterate it kind of before. So, like, the whole world has heard it. It's not just in some paper document somewhere.
Exactly, exactly. So very, very good. And also, there was a lot of chatter also about, under Greg, would Berkshire Hathaway be split up into several entities, like, spin out companies and things like that. And I think, the general consensus is that, please don't do that. So
Mm.
not that there's been any indication that that's going to happen, but also think, in recent years, Buffett have said that that's definitely not the plan. So yeah.
Yeah. And I mean, there's some parts of the company that I find a bit questionable, especially what's happening in the utility space. Like, I know there were some questions related to that. And I don't know. I feel like that part of the business seems like bad news bears. I know Greg Abel came from that world of handling the Berkshire Hathaway energy stuff, and that's his wheelhouse. But it almost feels like a very precarious place to be. Like, being that the cash cow was insurance, why do they want to continue being in the energy business when it seems kind of a little bit of a tough slog? Like it doesn't seem fun and it seems like it's going to get worse. So, I mean, I'm sure they are profitable to some degree because otherwise they wouldn't be in it, but from the recent annual letter findings, like even Buffett was saying how they had some losses there and with the railroad and it's a little tough. So I don't know. It makes me feel surprised that they're in these difficult businesses. And I know they're very important to American infrastructure, but it just seems like hard. Like I don't know. It like unlike being in something that just makes a ton of gushes money and it's fun, like sees candies, like energy is like, oh, it's like a drag. Like so I mean, I admire that Greg is willing to deal with all that. Like it seems really hard, and he seems to take it in stride. But I don't know if I would personally want to be having to lead that, or like the home services business, or how much things are going to change, and is it going to get worse in real estate for, say, the buying agent, if they're not going to get as much of a commission as they did before, and Berkshire had to be part of that lawsuit. So usually when there are settlements, there are some big business changes that happen where, because a business had to pay out money, like they might not maybe pay as much in certain respects to some stakeholders in real estate in that case. So I'm kind of wondering who is going to get the short end of the stick. And it's probably not going to be the corporation. There's probably going to be some workers out there. And I remember hearing that question from one of the shareholders who was working in real estate for Berkshire, and many of his family members were working for the Berkshire real estate place. And I didn't feel like I got a good answer out of that. Like I felt like it seemed a little bit fluffy, but if I was working in that space, I would not feel encouraged. Like I have job security. I'd feel the opposite.
Yeah, and so we don't have a whole lot of time left, but I would love to just chat a little bit about the energy business, and maybe we can do that in the next episode. So there's a lot more I want to say about the energy business, and we're almost running out of time here, Michelle. But before we end the episode today, I want to thank everyone who came up and said hello and was listening to the podcast. I really appreciate it, from actually all over the world, even someone from Australia was listening in. So thank you so much, Stephen, for coming up, and also for everyone else. We will discuss more of the energy business. So in the annual letter, Buffett did criticize the energy business a little bit. So next time I will share more about what actually happened at the annual meeting. So tune
Ooh.
back, yes, tune back on Tuesday in a week from now, and hear what else happened at the meeting and at the events around the Berkshire Hathaway Annual Meeting.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts, so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.